Thank you, kind Zoom voice. Okay, welcome everybody to our webcast today. I know we're starting a little bit late. Hopefully, we'll try to wrap up on at the top of the hour, but I know Johnny and Chris will be happy to stick around a little bit longer if we need to. Welcome to Cracking the COSO Code, a practical guide for compliance teams. I have just a couple of quick administrative announcements before we turn it over to Johnny and to Chris. As you know, this meeting is being recorded in case people just hopped on in the last minute or two. If you are interested in getting CPE credits, we are providing them. Actually, CPE credits both for the ECI if you're LPEC certified, or I believe that our friends at SCCE acknowledge our CPE credits as well. But also for this call, our friends at Stone Turn are helping us to provide CPE credits for NASPA, which is the National Association of State Boards of Accountancy. So for folks who are CPAs, that will be meaningful to you. And so all you need to do is email Patty Hernandez. Her email address is phernandez@ethics.org. I think she'll probably put it in the chat. Send her a note and let her know that you need CPE credits. And also please let us know if you need NASPA credits in particular so that we make sure we get your information to Stone Turn. This question comes up on all webcasts. This presentation deck, once Johnny and Chris share it, we will be sharing the deck with all of you. So no need to take screenshots as we go along. We are going to, as all of you know, this is a traditional Zoom platform. So please put your questions into the chat function and we'll be monitoring that as we go along. We'll be having some time for questions at the end. I am suddenly hearing feedback. Is that only me? If you are not on mute, please mute your microphones. That would be helpful to us. Otherwise, it would be my system. And then I just want to make you aware of a couple of events that are coming up. I'll remind you at the end as well. We have a virtual networking session for Chief Ethics and Compliance Officers or the like next week on May 21st from 1 to 2. We'll send you a reminder about that. And also, we are very excited that our in-person meeting of all of you, the fellows, will be July 15th and 16th in St. Louis. We've sent out the first pass at the agenda. We'll be following up with that as well with more detail as we have it. Registration will open very soon. So with that, I'm actually going to stop with all the announcements and turn this over. But just to remind you of the two folks who are actually our speakers today. Stone Turn has been a part of the Fellows Program for, I don't know, a number of years now. And so I'm sure that Johnny and Chris are familiar to you because they've been a part of our group. But if you don't know about Stone Turn, they have a really spectacular and very helpful organization that has done a lot of different kinds of projects, not the least of which is serving as independent monitors for different kinds of organizations. But both Johnny and Chris have a lot of expertise in the area of risk identification and risk assessment. So we're really fortunate that they offered to do this webcast for us. And I know each of them is going to share more about their own personal background. So Johnny and Chris, thank you so much for doing this. I'm going to stop talking and turn it over to you.
Thanks. So just briefly by self-introduction, I'm old. I spent the 1980s and 1990s in the U.S. Attorney's Office, so doing investigations. Then went to PwC, where I first did investigations and then got involved with this thing called COSO. And if somebody were to ask me at a point in my life whether I'd be playing for the New York Yankees or becoming an expert in COSO, I could assure you it would be the New York Yankees, and I was a terrible baseball player. Anyway, I aged out of PricewaterhouseCoopers. So after retirement from there, I joined Stone Turn, and together with Chris and others, what we do is concentrate really on risks and controls, remediation, and all things compliance related, and we'll be talking about that throughout. Chris? a couple words about you.
Sure, thanks, Johnny. I'm a little younger than Johnny, but I started my career at a global financial service company where I was doing accounting for mutual funds and doing the fund portfolio evaluations. I then joined Stone Turn, and for a good portion of a decade, a little bit more, I was doing investigations focusing on financial statement fraud as well as asset misappropriation. And then when Johnny had joined Stone Turn, I started to work closely with him and his team. And so really focusing more, as Johnny said, on the remediation aspect of things, helping companies address the problems, identify and address problems.
So oftentimes particularly when I meet lawyers and I say something about COSO, I get this, vague look. So we thought we'd just kick it off just with a polling to see how familiar folks are with COSO. Patty, can we try to? Oh, there it is. Look at that. Um, so I think everyone should have it on their screen. If you have a screen, I'm not going to read the choices because you know how to do it. But if you could just click on one and then submit it, then you'll have we'll get a quick vote in a few moments. Um, and while the voting is going on, I'll mention that talking about CPE, when I was at PwC, I don't need CPE because I'm not an accountant. I had so much CP at one point, I put it on eBay for sale, but no one bought any of my CPE credits. Um, Patty, do we have any sort of sense of the results from the uh, survey?
Survey says 61% chose letter C. I was applying COSO to compliance related tasks.
That they have.
Yes,
Oh, that's terrific. And the others do we have any percentage that never heard of the word or
16% have never heard of the COSO.
okay. At 16?
16, yes.
Yes. And the other
So
response?
13% heard of COSO but don't know what it means. And 13 have heard of COSO but thought it was pertain only to financial reporting controls.
Okay. Well, that's great. So I'm glad that a bunch of you, Chris, if you could get the presentation rolling, that would be great.
Yep.
And then that's great that folks know about it. So maybe we could chat as to how folks are using COSO. I was tempted for the Woody Allen fans among you to call this presentation everything you want to know about COSO, but we're afraid to ask. But instead, we went with cracking the COSO framework because it's hard to say. Chris, you want to take us through what we'll be chatting about today?
Yeah, absolutely. So, we'll start off, we're going to provide a brief overview of and background of COSO. We'll also provide some notable related guidance. We'll make reference to that, just things that you should be thinking about as well in line with COSO. And then we'll move on and we'll talk through some of the key terms that we've identified as it relates to the COSO framework that we thought might be worth just mentioning right up front before we start to dive into the COSO framework itself. And obviously there'll be others that we will cover throughout the presentation. After that, we will then give you an overview of the COSO cube itself. We'll describe the different aspects of the cube and how they interplay with each other. And then we will provide some examples of how to apply the COSO cube for compliance personnel in your compliance programs. And then, assuming that we have some time, we will start to explore or discuss ways in which AI is being used and how that applies to the COSO framework. And we'll provide some examples of things that we have done in our line of work where, we're utilizing AI as part of our assessment of compliance programs.
And yeah, and we're going to keep the components, discussion of the components relatively high level, but as Pat said, you're going to have access you'll have access if anybody wants it to the PowerPoint. So in the appendix, we have a deeper dive into the various components. And if that's not enough, then what I would suggest is fork up the money and you can read the COSO framework from 2013 directly, where you get all of their principles, et cetera, et cetera. So, why are we, starting with the history of COSO? Very briefly, the reason why is, from my perspective, because of a historical quirk with Sarbanes-Oxley, most people associate COSO in a much narrower way than what it is meant for. And people think of COSO purely as either risk management or, as we know from the poll, something that financial statement auditors use for the internal controls over financial reporting, or companies use to assert the effectiveness of their internal controls over financial reporting. We're going to get into the word what internal control means, but really what this is about is a company has various objectives, and the COSO framework really is an integrated framework as to how companies can meet those objectives. So it started in 1992. In 2000, and no one ever heard about it, frankly, just kind of went to sleep. After Sarbanes-Oxley, there were two legal requirements. One was management had to assert to the effectiveness of its internal controls over financial reporting. Virtually every company would use, and you had to say what framework you were using. Virtually every company would use COSO as its framework, and then there was a subsequent audit where auditors have to audit this. All these links, by the way, all these things that underlined are links to the extent that you want to get to them. COSO then got reissued in 2013, and that has spawned a bunch of documents which are easily available. We have links here, I believe, but one for this particular group might be interested is, as part of the ERM framework, the COSO issued guidance around the use of COSO specifically in the compliance world. But one of the takeaways that I would urge from this session today is to use COSO outside of pure legal risk, and as well for enhancing the value of the compliance function. Chris?
Yeah. So again, as mentioned before, we wanted to just highlight a few key terms, especially for those who might not necessarily be familiar with COSO. One of the most important ones, as Johnny had mentioned, is the term internal control. This can be a little bit misleading or confusing for someone who's not familiar with the COSO framework. On the face of it, sounds like it might be just specific control activities that are used, individual controls, that is, to mitigate some of the risk. But under the COSO framework, it really is the system in which, or the process, I should say, in which the personnel, the systems, and the technology are used and designed to reasonably provide reasonable assurance that the company or organization is achieving their objectives. I note here, objectives is another term that we wanted to call out. Under the COSO framework, there really are three major objectives. There's the reporting objective, which is really related to reliability and transparency. There's the operational objective, which is related to effectiveness and efficiency of the organization. And then the third one, which I'm sure everyone on this call is intimately familiar with, is the compliance, which is adherence to laws and regulations. One of the other things just mentioned here is the risk appetite. As an organization is setting out their objectives, the risk appetite is very important. It's really trying to figure out what is the amount and type of risk that an organization is willing to accept in order to achieve those objectives that they identify, which will ultimately kind of drive your risk assessment process and the activities in terms of mitigating those identified risks, as we will get into later on. One of the other things we thought was important to note is the difference between the control suite as well as the control activities. You know, control suite is really a broader consideration of all the policies, the procedures, the tools, the controls that are in place to help the organization to manage, to govern, and enforce their internal controls across their operations. Whereas control activities are more so the individual uh, elements or ones that contribute to an overall control suite. You know, we'll talk about it a little bit more later on, but one of the things that we have seen that is common among many of our clients and different organizations is that testing of the controls will really focus on the individual control objective. And when you're thinking about trying to mitigate the risk, it's important to take a step back and think about the overall control suite as a whole and how is that risk being managed. And then the last one and just call out is really the risk response. So it's important, you know, as you're thinking through, you have your objectives, you establish your risk appetite, you look at the risk and the control activities that you have to mitigate those risks and what is the remaining risk, and determining whether or not the organization will accept those, avoid those, reduce them, or share those risks. And so those are potential ways to deal with the risk and determine whether or not there's additional activity that might be required and what steps you may take in order to get comfortable as you try to achieve your objectives.
Yeah, and I want to give you a real life example for what Chris was talking about for the difference between control suite and control activities. So we had a client, it was a bank, very large bank, and when audit would come in, they would always audit against the objective of a particular control. And whereas we were focused on mitigating the risk, and the auditors, this was a Big Four audit firm, not PwC, but they wouldn't be able to say, well, does it mitigate the risk? They would only say, does it achieve the objective? And when you're dealing with risk, you really need to focus on the control suite. The only other bit of color that I wanted to add is the interplay between risk response and risk appetite. Because you know, a mistake that lots of folks make is once you set your risk appetite, right, as you're doing your risk assessment, risks that are within appetite, you don't really need to worry about, right? It's once risks are out of appetite, then you then begin to looking at the control activities. I mean, you can always look at control activities, right? But if it's within risk appetite in terms of an analysis, right? If it's outside of appetite, then you look at the control activities. If the control activities after you test design and operating effectiveness brings it within risk appetite, your residual risk, you could pretty much stop there if you want. So the risk response typically is referring to those risks or opportunities, as we'll discuss later on, that are outside of appetite, and what are you going to do about it? And you get basically four choices, as Chris says. You get to accept it as is, you get to avoid it, you get to get insurance, or you could try to reduce it. So if the risk is jaywalking, I'm going to get hit by a car, right? Well, I don't think I'm going to get hit by a car. I'll accept it as is. I won't cross the street. I'll get life insurance or sharing the risk, or I will go to the crosswalk and to reduce the risk. Chris, can we go to the next slide? So, of course, this is what everyone's been waiting for, which is what is the COSO cube? Oftentimes, when you see COSO, what you're going to see is just the front part, which are often referred to as the COSO components. We'll get to them in a moment. As Chris says, so the top part is the various objectives. And this notion of internal controls over financial reporting, and under the original COSO, reporting was financial reporting. If you kind of visualize it, right, it's literally going over that reporting piece. It's gone beyond financial reporting because in most of the crimes and frauds and misconduct that I have dealt with, and I'll give you an example. I was one of the monitors of Volkswagen around reporting of its emissions. Okay, most of the crimes and misconduct that you see tends to have some sort of non-financial reporting attached to it. So that's why it's good that it's gone beyond reporting. And it's also good for you to focus on operations because whereas compliance is focused on legal risk, operations is where you get to help the company make more money. So from my perspective, particularly in today's environment, if the value proposition of the compliance function is we're going to keep you out of jail, under today's environment, that's just not going to cut it. Frankly, it's never cut it. And I think to a certain extent, it's a blessing in disguise for the compliance function, this area of deregulation and shifting enforcement priorities, because it forces the compliance function to think more about helping the company make more money and not just mitigating legal risk. So that's the top side of the slide. The vertical piece, Chris, you want to take us through the vertical piece?
Yeah, sure. So the vertical piece is related to the organizational structure. And really, the point here, a key takeaway is to note that the COSO cube, the way it's set up in the framework, is very flexible. So there's certainly going to be activities that relate to the overall enterprise. So that's at the entity level. But then there's also, you're able to apply the components that are in the front here and establish independent objectives, which is what Johnny was just talking through at the top level there, to the divisions, subdivisions, functions, and operating units. So again, I think the key takeaway there is there's going to be certain activities that are applicable broadly to the organization, but there's certainly ability to apply the same concepts to target more specific risk as it relates to and objectives as it relates to the particular functions or businesses throughout the organization.
And so I'll give you an example for this, right? The entity level, that's fine, but for the most part, materiality for many of organizations, you're never really going to reach a level of materiality. So this gives you the flexibility to use COSO anywhere in the organization. So I'll give you one example, which is if you have an underperforming business unit, broadly, if you did a COSO review, if you will, of a underperforming business unit and applied all three objectives, not just compliance, but operations and reporting, experience shows that you will get a 15-to-1 return on the cost of that review. Let's say your compliance function does it together with business leaders. Whatever your internal cost for that review is, 6 months later, that underperforming unit from a financial perspective will just be doing that much better. I say that just as an example of how you can mix and match these things. The other thing is, as Chris said, internal control has nothing to do with controls, even though it sounds like it. But that's technically, I don't know why the COSO folks use that phrase. They also say integrated, so it's called the Integrated Internal Control Framework. And what they're referring to there is it's all of this stuff, right? It's not any one single thing that a company needs to use in terms of measuring or thinking about how well the company is achieving its objectives. So why don't we jump into the components briefly? And as I said, it's in the appendices, and then we could go deeper if you want to go deeper. Chris?
Yeah, thanks, Johnny. And just one thing I would just add to what you had said as well is because it is integrated and there's certain aspects that could impact multiple components, which we'll talk through right now. It's good to keep in mind that it's just not a linear process. It's not one step after another. There are impacts So there'll be certain activities within one of these components that could relate to multiple of them, as well as the objectives. So the first one, as we look at the cube itself, you'll see at the top is the control environment. And really, this is foundational to the internal control. I mean, it really establishes the standards, the processes, the structures that provide the basis for carrying out the internal control across the organizations. This will include things like the commitment to integrity and ethical values that the organization has. And so underneath that, or what would demonstrate that, is really has the organization established their standards. That could be a code of conduct, could be standard of conduct, could be compliance manuals. There's different standards that are being established by the actual organization. And then what is the tone from the top? And so how is senior management and carrying out the integrity and ethical values that the organization is desired to achieve and to maintain. It also relates to having the reporting structure. So making sure that you have the proper oversight in place, you have the governance, you have the board of directors, making sure that they have interactions with the right folks throughout the organization to receiving the right information, really setting it up. A lot of organizations these days are using the 3 lines of defense. So, the first line of defense with the business owning the risk, the second line really providing guidance and setting the frameworks and helping the first line achieve those objectives, and the third line making sure that the first and second line are doing what they're supposed to. And it also speaks to the competency of employees and making sure that people are being held accountable if they're not adhering to the standards that are being set by the organization. John, you want to talk about risk assessment?
Sure. And before I do that, so since there are a lot of, this is for compliance people, if you were to do a Venn diagram between the COSO framework and the DOJ evaluation of compliance programs criteria, which, as a by the way, is still being touted by the DOJ. So as most of you or many of you know, the DOJ issued new guidance this week on corporate enforcement, the corporate enforcement policy as well as the monitor policy. Certainly worthwhile reads. But as part of that, when you read it, they don't make specific reference to the ECCP, but there's a link to it. So it's kind of like inferred that it's still around. Well, the ECCP starts with risk assessment as opposed to the control environment, then goes to the control environment. But as I said, you're familiar with most of this. A risk under COSO is basically an event or scenario that impedes you from attaining your objective. So if my objective is to cross the street, a risk is that a car is going to hit me and I'm not going to make it across the street. And I emphasize that because when we think of risks, particularly when lawyers think of risks, they think of the legal, antitrust is a risk or FCPA is a risk. Those are legal statutes. What the risk is the specific event or scenario that gives rise to that legal violation. So our experience is that poor risk assessment is the number one cause for major compliance violations. And that is because when you look at major compliance violations, and I'm putting FCPA out of this, is the company never identified or thought of the risk. And this is where compliance and lawyers could get into good fights, right? As to our view is, or my view is, you identify a risk, you exercise your professional judgment that it has a remote chance of occurring, and you write it down to demonstrate that you thought of the risk. The risk appears down the road, and now there's a document that says you thought of the risk and you applied wrongful judgment. The lawyers don't like that. I happen to think it's useful, but the point is risk assessment really is the key. And I think one of the great learnings from COSO of, what are the various scenarios that might give rise that's going to impede my objective. When you go on the opportunity side, opportunity is just the opposite side of risks. So what are the event and scenarios that will help me achieve my objective? And then how do I go about having internal control, processes, controls, et cetera, to be able to maximize that opportunity. Chris, you talk briefly about control activities.
Yeah, sure. So, I mean, control activities, as Johnny has just talked about, the identifying the risk is really what is your response to those risks to really mitigate the risk from preventing you from achieving your objectives. And so that could be different types of controls that you have in place. They could be preventive controls. So if you're dealing with a third party, let's say, you may need to do some onboarding due diligence. Could be detective controls. So you're sticking with the theme of the third party. You're doing the ongoing due diligence after you already conducted your onboarding due diligence. And you may have some transaction monitoring that's looking at the different payments to the third parties. There could be some directives that are provided to personnel. So it's the training, it's the firm-wide policies and frameworks. There's automated controls. Again, come back to ongoing monitoring using different systems. And then there's manual controls. So it could be, pre-approvals of gifts, travel, and entertainment, or three-way matches for payments. So it's really making sure that you have some type of response to be able to timely prevent and detect the risks that might prevent you from achieving those objectives. And, one of the things that we see commonly at organizations is that there's either over-reliance on controls, so meaning that they believe they exist, first of all, and they may not be actually in place. And then two, that there's the presumption that they are actually operating effectively just because they're written down. And so, that is something that we commonly, as I said, see at organizations where it's important not only to identify them, and I'll give you an example where we worked with a client where we asked them what their key controls were, and they struggled to do that. And then they came up with a list of about 2,000 controls. And then we asked them to really take a review of them because some of them didn't necessarily seem to appear to be controls themselves. And based off of, a review of that and further discussion and looking into it, ultimately that client ended up getting their controls down to 200, which seemed to be more manageable and reasonable. But the point there was at that time, they didn't even have an inventory of controls. So when they're asked to demonstrate or articulate how are they actually mitigating the risk, they weren't able to do that. So that's one of the other things that Johnny, myself, and our team stress with companies is it's important to, as Johnny said, not only document the risks that are there, but what is your response so that if someone wants to understand how you're getting comfortable that you're mitigating those risks to achieve your objectives within the appetite, you have something that you can point to.
The punchline, by the way, of that anecdote that Chris just mentioned. So they went down from 2,000. They said we have these 2,000 key controls, and then this was for 17 separate misconduct risks, and down to 200. The punchline for that was, at the end, we said, okay, so we got it down to 200. What about the other 1,800? And compliance in that particular matter became the heroes at the company, because once they identified 1,800 non-key controls, they were able to eliminate lots of controls because they really weren't linked to a risk. And what happens with controls is kind of like my basement. It just kind of fills up with stuff, and you need to kind of clean things out. Chris, you want to speak very briefly about information and communication?
Sure. I mean, obviously, information is important and necessary for entities or organizations to be able to carry out their control responsibilities. And the communication component of it too is basically to inform or provide the necessary information that people need to be aware of so that they can execute on the day-to-day controls. You know, in a compliance function, there's lots of data that can be used. And so it's important to understand what data is available, how is that data being managed, you know, what are you doing with it? How are you utilizing that to identify particular red flags? Is there a good investment in the data analytics group as it relates to, you know, your compliance program? You know, Johnny had mentioned before the DOJ guidance, the evaluation of the corporate compliance program. You know, the most recent version of that really focuses in on the amount of attention and investment that is provided to compliance functions at organizations. And by that, I mean, it's important that there's a consideration for proper investment, make sure that the compliance function has just as enough resources and devotion to data analytics as, say, something like the marketing department or some other department at the organization. That really shows that there is a commitment to you know, your overall compliance program. The other thing is AI is a good example where there's new technology that's coming out all the time. And so it's just making sure that there really is safeguards in place. And, you know, I mentioned there's a lot of available data that's there, but it could also get you into trouble if you're not aware of what information and data is out there, what's being collected, how is it being used. And so that's part of this component is really making sure that you're identifying, you're managing, and utilizing that data appropriately. And then you're also providing the right communication. So the results of the analysis that may come out of data analytics, let's make sure that information is being communicated to the right stakeholders throughout the organization. It's allowing senior management and the board of directors to receive the information that they need to make proper decisions to achieve their overall objectives.
If you haven't read the DOJ ECCP that came out in 2024 on it's mandatory reading if you're in this world to focus in on what they're talking about vis-a-vis data. And it kind of makes sense because, as I said, I don't use the scare tactic that you're going to be before DOJ one day. But you know, if you were to have that experience today, what they're going to ask you is, how come you did not find this misconduct earlier through data analytics? And now, and I just heard this yesterday. Now they're beginning to elevate the conversation to, well, how come you didn't use AI to be able to find this misconduct? I don't think the expectation yet is you must use AI, but it's there. The final element, and then we'll move to some briefly to some use cases, and we'll open it up for a discussion. Is testing. As Chris said, people tend to over rely. Many companies get into trouble either because they failed to identify the risk, they over relied upon control activities, or they didn't connect the dots, right? On the over reliance on control activities, it's because they were not tested. And it's become exacerbated with the 3 lines of defense model, because in lots of organizations, internal audit is not really auditing around, again, the control suite and giving you assurance that your risk is mitigated. So as a result, if you're not doing the testing, your residual risk is off, right? And then there's always that question of, well, if you had a problem, where was internal audit, or how come this wasn't picked, how come this area wasn't audited and tested? And then finally, when you do have an issue and you do have remediation, it's not done until somebody has come in and tested the remediation and tested the new controls. I know we want to leave time for questions, so Chris, can we just jump over to some of the use cases? So, so in terms of the first one, is emerging risks. Again, this one I could have used the whole COSO framework, but for example, if you're a manufacturer and you're facing tariffs, it's not an emerging risk, but you owe it to the company, right, to be assessing its tariff compliance program. That's the one on the right, right? There's a reporting element in the middle, and on the operations side is you also could apply COSO to make sure that you're not overpaying tariffs as well. So again, we're short of time, but again, you could use this COSO framework of, okay, which objectives around tariffs do we want to focus on, right? And then where in the organization do we want to look? Do we want to look at a division level? Do we want to look at a particular function, et cetera, et cetera? And then the keys here would be, all right, so let's identify the various risks, the schemes and scenarios of what could go wrong that we're going to get ourselves in trouble with a tariff problem, right? It might be things that we do ourselves, right? That we label something either by accident or on purpose. Or it could be third-party risk of what your suppliers are doing. Take a minute and ask your Mr. ChatGPT what are the major tariff fraud risks, and you're going to get an answer of about 8 or 9, 10, and then thinking about those of how could that happen at my company, and then doing a deep dive on the control activities. Chris, should we go to earnings? Again, we're moving this along quickly because we're slow on time. Yeah.
Yeah, so I think for earnings, we've talked about this a little bit, but as you said, Johnny, in today's environment, really trying to use the proposition that we'll keep you out of jail is kind of a losing approach, right? I think the businesses and overall are saying, okay, we want to see more of a return on investment. How can compliance kind of make a use case to say it's important for compliance, and therefore if there is a lower enforcement activity or the regulations are starting to be a little bit more relaxed, why would we spend the money to invest in compliance? And so what we would suggest is really thinking about, as you mentioned before, multiple objectives, right? It's expanding it. So FCPA risk is a good example of where, yeah, it's a no-brainer. Everyone thinks of it as a compliance risk, and you don't want to break the law, so therefore you shouldn't pay bribes. But if you expand upon that and think about how might you articulate that slightly differently, that doesn't go away, but of course you still have the operational objective as well, which would be, let's try to avoid internal fraud scenarios and excessive payments. So that will help at the end of the day, the bottom line, the earnings. And of course, there's always the reporting objective for FCPA, where you want to avoid inaccurate books and records. The other thing that, Johnny, you highlighted earlier, which I think is important here to help increase earnings, is looking for opportunities, not just limit to focusing on the risk or events that may take place. So, compliance can help the organization access to new markets. An example could be just a manufacturer able to supply major international OEMs, right, that require certain certifications. So it's helping to obtain those so that you can expand the operations there. It could be putting in new controls to help accelerate the production. So it's really, as we look at increased earnings, it's looking at the components themselves. It's making sure you're working with the business to identify the risks that could prevent additional cost, if you will, or reputational or fees. And then making sure that you're identifying control activities to help expand upon that business. The other big thing is just operating efficiencies itself. I mean, we talked about before about reduction of controls. That's one good example. Johnny, you mentioned tariffs. It could be working with the business to adjust where certain sources in the supply chain, where that's coming from, or ways to reduce the cost associated with the products from a manufacturer, that is. So, there's multiple ways to approach it, and it's really starting to think more broadly than just the straight compliance objective.
One other thing, by the way, is worth mentioning is in today's world is I would urge everybody on the call in a corporate setting is to recalibrate your compliance risk assessment based on today's world. Your risk appetite might not change, but the likelihood of something occurring or getting a compliance issue certainly would change with the shifting DOJ priorities as well as the impact. Another good use of COSO is the root cause analysis. So, I find that companies don't really know how to do a root cause analysis. If risk assessment is the cornerstone of developing a compliance program, the root cause analysis is the cornerstone of fixing it and figuring out what happened. So if you could apply COSO, because again, COSO are all the things you would have in place to mitigate or avoid or reduce the risk. So you can ask all of these same questions in the root cause analysis. What do I mean? What was it in the control environment that contributed to the misconduct? It could be the lack of integrity. It could be the tone of the middle. It could be incentive programs, et cetera. That might go beyond the specific misconduct. Did the organization identify the risk? If not, why not? If we have a poor risk assessment, what do we need to fix about our risk assessment? Obviously, the control activities is what people typically would focus on. Information and communication. You'd be asking about could we have found this through data analytics, et cetera, et cetera. You'd use the risk assessment process also to figure out, all right, I have a root cause analysis. What's the so what of the root cause analysis, right? So what risks might arise from the root cause analysis? And when you're dealing with recurrence is what are the various events and scenarios that misconduct would recur? Because very rarely is it the exact same misconduct, but it's close enough and you should have been able to figure it out somewhere else. And then again, control activities, that's your bread and butter of, what action are we going to take to correct it? And then, of course, monitoring activities to test the effectiveness of what we've done. We're at a time for the bonus topic, so you'll have to take us out for drinks for that. But with all kidding aside, AI, it's such a powerful tool for all these aspects of COSO, whether you use it. We've used it for scenario analysis, for example. We've used it for, I'll give you an example. There was a tech company, there's a company that had a cyber incident. They wanted to test their framework, their policies and programs and controls against the NST framework. We put the NST framework into the model, took the documents in, and spits out right away what your assessment is. You can, if you have an in-house group, take the DOJ ECCP. You could put that into a model. You could shove in all of, I know I'm being simplistic, but it's really, you could do all this. Put it all in, and it's going to spit out where you're lacking vis-a-vis the ECCP. But I see that we're 5 minutes up, and Pat, you're going to yell at us for taking too much time. So I'll turn it back to you, Pat, or to others for questions.
I was not going to yell at you. Actually, Chris, before you take down the slides, I wonder if you could quickly just flip through and show everybody what's in the appendix of these
Sure.
slides, because you've really provided a lot of really nice information. We will be sending these to you, so I don't want everybody to just think, oh, it's the deck I saw. So very quickly, they put together more
Yeah, sure.
slides than for the actual presentation so that you have more information about the framework. And Johnny and Chris, you were so riveting that not a single person put a single thing into the chat.
Well, they might have been having.
Crickets. So actually, I want to just throw out a question to the group. There, we know that some of you are using the COSO framework for your programs. How are you doing that? Is anybody brave, willing to unmute and tell us a little bit about what you're doing?
Let the volunteer somebody.
Yeah, or I'll volunteer somebody, but I
Yeah,
don't know.
right.
I don't know who answered the question. Yes.
Well, in theory, 60%, right? So you could pick on anybody.
None of us, yes.
If I was a weather forecaster, I'd always say there's a 60% chance of rain. I would never say 100% chance of rain. Nothing good comes out of that, you know. But again, we've used COSO, as I said, we use it to develop a deep dive assessment criteria for compliance programs, Pat. And we've also used it, as I said before, to frame a root cause analysis and a remediation program, again, focusing on what could go wrong.
Right.
You know, if there's any one thing I think people could take from COSO, two things actually, is it's much broader than risk assessment. It's much broader than internal controls over financial reporting. And it can be used to help the company make money, not just
Right.
mitigate risk.
And correct me if I'm wrong, Johnny and Chris, but we were saying in preparation for this call that in the current environment where what we're hearing from the DOJ is programs are too complex and they're too, there's too much of an investment. And if folks on this call are getting pressure from management to say, well, maybe we can scale back our program, the framework could be a helpful way to be able to organize and make an argument for why you do what you do. Is that the correct way of thinking about it?
Yeah, I find it's a very good framework for having discussions with business leaders. And you're not going to show them the COSO cube, right? But that concept. It's also very helpful when you're dealing with liaising with the internal audit function because they will know it.
Right.
And you're talking their language as well as the finance function. So when compliance is leaving the compliance world, they don't know about the DOJ, ECCP. They don't want to hear about it, right? And also, it's not Amer and for the multinationals, it's not American, right? This is a global framework. It's not linked to any particular government, and it's really very, very flexible.
And is it a safe assumption that if somebody who's been on this call is curious about how they can take this framework and apply it to their programs, they can reach out to you and you'll chat with
Obviously.
them about, okay, awesome.
And for those of you who have teenagers, I can show you how to use it with teenage children, having gone through that period of my life.
And can you pair the COSO cube with a Rubik's cube? That's the question
Right.
we all really want to know. Well, I know we're at the top of the hour. Johnny and Chris, thank you so much for this. It's really helpful. I remember from the day I entered this field hearing about the COSO cube. So it's nice to have it applied very specifically to the ethics and compliance function. Before we sign off, I will say, Johnny and Chris, I think it's fair to say you're going to be at our July meeting in St. Louis. So we won't have to buy you drinks, but we can serve you drinks and you can talk about
Okay.
AI and COSO. That'll
Anybody
be
wants to
fun.
give AI, I'll buy them a drink.
So
It's
everybody on this
fascinating.
call, I'd like you to, especially for the chief folks, senior most folks, mark next Thursday, 1 to 2 p.m. on your calendars. We're just going to have a time together for informal conversation, networking, touching base, more discussion about this. If you had, we're hoping we could have more conversation. And then also July 15 and 16, we will be in St. Louis for our in-person fellows meeting. So again, email Patty Hernandez if you'd like CPE credit. And we will look forward to seeing everybody again next week. Thank you again, Johnny and Chris. We
Thank
appreciate it.
you. Bye,
Everybody have a
everybody.
good day.
Bye.